How's it going, everybody? It's Stas here. Welcome back to another video. So we have to break down Tesla stock in this one, do a quick rundown on the charts, how the stock's been doing as of late, and most importantly, what I'm looking to do, what my trading plan is right now with Tesla stock. I actually want to show you guys a tool that I've been using that's helped me orchestrate my trading plan. It gives great insights. We'll go over that later in the video, but first, hit the like button, make sure to subscribe. We're almost at 40,000 subs, guys, and well, take a sip of your coffee. You're going to need it for this video, and let's get right into it. So, Tesla stock right now in real time is up a good chunk off the lows on the day, which talk about volatility, guys. We opened up at about 245, actually more like 243, 244, either way. Then we dumped off to about 239, about a 2% drop off there, and now we're pushing back into the mid 240s. And overall, guys, Tesla stock has been choppy the last couple of days. This right here is the 5-day, 5-minute chart. We've been running from, 240, 237 on the low end to about 260. That was the high from around a week ago. Yeah, last Wednesday we hit 260. So we've been all over the place. You can see here on the 20-day chart, we do have a death cross. We are slightly under the moving averages, which is not the best sign in the short term for the bulls. It's potentially signaling more downside to come for the stock. But as you go on the 4-hour time frame, you're like, wait a second, Tesla went up a lot over the last month and a half, 2 months. It was due for a pullback, which I wholeheartedly agree with. We got the delivery numbers, I think, a week ago. That sparked the sell-off here. They were a little bit disappointing. They missed the estimates, and now we're coming down a bit, and we're still holding trend, believe it or not. We are above the 180 SMA on the 4-hour chart here, and we could argue there is a bit of a triple bottom forming right above this moving average, which is a good sign in the short term for Tesla, guys, but we're not fully breaking out by any means, but it is something worth monitoring here in the short term. So, yeah, we hit 270 back in July, saw a big sell-off there. We got back to about 270. We got the delivery numbers. That caused another sell-off. So we are a bit oversold on the RSI. Let's see if we get a rebound here, maybe into earnings, which, by the way, in 2 weeks from today, 2 Wednesdays from today, we're getting their earnings after the bell. So let me show you guys this tool that I've been using for my trading that's helped me, immensely with insights, with data. And guys, whenever I'm trading, I like to use tools that give me numbers, data, right? Not fluff and a bunch of BS, right? So let me show you what is going on here on Edgeful, which is the tool that I've been using here. I'll leave a link for this down below if you guys are interested in the description box, also pinned in the comment section. But first, let's run through it. I'll show you guys some basic features that this has. Well, we'll go over one of the features. It has a lot of features, actually, but this one right here I've been using a lot recently, right? So you can filter between the different markets here. Obviously, we're going to go on stocks, but it also has Forex, crypto, and futures. And the report type that we're looking at for the sake of this video, guys, is price action, because after all, what are we? We're traders, guys. We care about the price action. You could also look at volume, indicators, reports by style, which we'll do maybe in another video. But for now, we'll click price action, and the type of report or what we want to focus on here is gap fill, right? Let's click that. It's got the gap fill, and the ticker right here is Tesla, TSLA, and the date range you could filter by 3 months, 6 months, year to date, 1 year, 2 year, 3 year. But for the sake of this video, let's do 1 month here. Let's get some recent data, and we're going to use the standard feature here. We can go by size, by weekday, by close, by spike, by fill time, by previous candle, but we're going to go on standard here. So essentially, guys, what this shows us is you can see the two bars right here. We have gap fill on the left, or gap up, excuse me, on the left, gap down on the right. So essentially, and you can see above my head even more numbers here, this gives us the insight over the last month how many times Tesla has gapped up, how many times Tesla stock has gapped down. So it's gapped up 55% of the time, and it's gapped down 45% of the time. And you might be asking, Stas, what the heck constitutes a gap up, a gap down? Well, I'm glad you asked. Let me show you this. So a gap up, we can see right here, day one, you got the day one closing price on the left. All a gap up is when on day two, you open above day one close. Very simple. So 55% of the time, Tesla has gapped up from the previous day. Very simple. And 45% of the time, it has gapped down, which you can see right here. Day one's closing price on the left, we gapped down, which means on day two, we open below day one close. So just there, you can see more than 50% of the time, at least in the past month, we're gapping up. That's very valuable data, especially if you're trading at open, you're trading in the pre-market. That is very important to understand. Now, we can go even deeper on that. We can see here, out of those 55% gap up days, 7 of them, so 58% of them, we can see right here, the gap up filled, and 42% the gap up did not fill, or 5 times. So again, 12 times we gapped up. All right, beautiful, 55% of the time. And 58% of those 12, 7 times, gap up filled, gap up did not fill 5 of the times, or 42%. So gap up filled, what does that mean? Well, let me show you this chart right here. So day one's closing price is right here on the left. You guys can see that. Boom. So the gap up filled, right, means we gapped up. Obviously, we broke out of the previous day's closing price, but then we sold down, and we actually touched the previous day's closing price. So we actually filled that gap. So the gap up filled essentially means we gap up in the open, right, or at early in the day. Then we fill the gap back down. So that could give us insight. Okay, we see Tesla stock move up. It gaps up one morning. Maybe then we could take a short trade in the very short term here, which could work. Let's see here. What was that percentage time? 58% of the time. So that gives you some insight there. We got a gap up in the morning. All right. More times than not, it fills that gap down. You can make a nice little trade there. Maybe some short-term puts. Maybe you could short the stock, right? Depending on your style of trading. That could give you some insight there. And yeah, I mean, this is very valuable stuff here, guys. And if we look at the gap down, right, 45% of the time, 10 times, it has gapped down. And the gap down filled, let me show you this. Gap down filled, I think it was, let's see here, 70% of the time. So 7 out of 10 times, guys, the gap down filled. So that means essentially, look, day one on the left, we closed whatever price that is. Then we gap down the next day. Huge gap down. So this goes to show 7 times out of 10, if Tesla stock in the past month saw a big gap down in the morning, early in the day, over the next couple hours, throughout the rest of the day, day two, we got that gap fill, right? We filled the gap up, which means we pretty much got to the previous day's closing price. So that could give us an opportunity to go long in the short term, right? Buy some calls, whatever it may be, and trade it like that. So I've really been using this on my trading, guys. It's really good stuff here. What's the other one? Gap down, not filled. So 30% of the time in the past month, the gap down did not fill. So let me show you what that would look like. So the gap down not filled. We can see here on the left, day one's closing price. And then day two, if it did not fill, right, we get the gap down in the morning, whatever. We see a pump. We try to get to that previous day's closing price to touch it, but we just don't do it. That constitutes gap not filling. Then we dump off the rest of the day. So that happens 30% of the time, but more times than not, the gap down fills. So I'm looking at Tesla stock in the short term, right? Using this data and the previous price action, I'm like, okay, if we get a big gap down like this in the morning, and we kind of saw that today, did we not? We had a huge gap down in the morning. Boom, 70% of the time in the past month, we have filled that gap. And we can see exactly that if I pull this chart back up. Let me show you this here, guys. We can see exactly that pretty much today, literally, right? We we closed at about 244 yesterday. We opened today at about 243. We saw the gap down to 239. You guys see that right here, big gap down to 239, and then boom, we filled this gap, boom, right back to 244, right? Where we closed yesterday, opened today. This stuff, it would have worked today. That data would have been perfect for today. I didn't take the trade, but you guys see kind of what I'm saying here, right? 70% of the time it gaps down like we just saw. The gap fills back up. Or 70% of the gap downs fill back up, at least from the past month. So that's very, very useful info there from edgeful.com. And again, there's a lot more you can do with this platform, and we'll break it down a lot more moving forward. We'll make a lot more videos using edgeful.com. But yeah, that's pretty much the gist of that feature. I think is very valuable. Check out the link down below in the description box if you guys are interested in using this tool. Again, I use it. It's great. And make sure to check out the comment section. It's also pinned right there. And with that being said, guys, I appreciate you all for tuning in. Hit the like button. Make sure to subscribe. Cheers. I'll catch you in the next video.